Yes, so hello traders and welcome to today's analysis, and we are going to be looking at gold. I remember yesterday I had promised to do a review of I had promised to do a post PPI review, and so maybe we can start right from there. So PPI was quite aggressive yesterday. It was quite aggressive. I know. Sometimes we don't see the market reacting immediately to news, and then we think that there was no impact, but actually there was a lot of impact. But now PPI came out at around 3:30. So at around 3:30 we were around this level, and you can clearly see what happened. The market moved up aggressively, and remember, this was a critical high, the previous high of day for the previous day. So this was the previous day high of the day, and so the market pushed up aggressively. And one more thing that I'd like you also to note is that we actually dropped below our 7 a.m. open. This is the 7 a.m. open for Thursday. So we dropped below that line before the news release, so there was no need to manipulate below it for us to go up, and then there was divergence between these two areas. There was not SMT, there was TDI divergence, as you can see clearly here. Higher high, higher low, and a lower low, lower low, and a higher low. So that was the divergence that we got, and then the market just took out this high, and we continued pushing. We even took out the all-time high, which had been marked here. I've not changed this as yet. So this was the all-time high at 20. It was around 25.32. So we have traded up and above it, and the market just continued. So yesterday gold was very aggressive. It was very aggressive. It really moved up. So I caught part of the move. I did not stay the whole move because I was thinking of 25.31 level. So I'm content with what I got. So getting back to trade this was a bit tricky, and I think it is also not advisable to just be chasing the market just for the sake of it. So this was good. Now that is all about PPI. So today we don't have any red folder news for dollar, which we normally look at for us to align ourselves accordingly. So for today, what I want to bring to our attention is the possibility that gold might be doing a TGIF today. TGIF is, thank God it's Friday, it's one of the ICT setups. So it might be doing it today following the big impulse move that we've had all the way from Monday. So today is an excellent day for us to get a TGIF. And what TGIF is, simply put, a TGIF is just a matter of, how do you call it? It is just a retracement of the main wave, or a retracement of the main move. If the main move was bullish, as in we've all seen that the market has been bullish since Monday. So we actually Monday's low stands to date as the confirmed low of the week, unless we have the market crashing today to take out that low, which is not probable. Not probable, but again, these are just the markets. Anything can happen, but not probable. So let us see what we are thinking of today. So during Asia, we had a trending market. So this market continued pushing to the upside very nicely. So it pushed to the upside, and now we are having some retracement of sorts. The line that you see here, all these lines that you see on my chart are very relevant, so forgive the clutter, but they are very relevant for this explanation. So this is our 7 a.m. Friday open, and if you've been watching my videos, I've explained the significance of this line, and if you have not watched the previous videos, please go back and watch them, and you'll understand why I normally look at this 7 a.m. Open. And remember, all these times are in Kenyan time, so this is equivalent to midnight New York from where you are, so you can easily calibrate that. Now, I'm seeing a drop. So initially I was thinking that maybe the market wanted to start by first of all taking out this liquidity above this mid big figure, which is 2,575. So I thought that maybe the market wanted to come to that area, but as we can see right now, we have alternative B. So we have alternative A, which is the black black alternative and the blue alternative. So maybe it's the blue alternative that is playing out, but I'll keep both of them on the chart and watch them, because I'm not in any trade at the moment. What I like seeing, number one, I like seeing price trade to a significant level during the time between 10:30 and 12:30. But the best time that I've been entering the market in terms of the London session trade, I've been taking it at around 11:30. So by 11:30, I want to see what price has done. Has it hit this level, or has it grabbed liquidity below the Asian range, below the Asian Open, today's Asian Open? So if we get price taking out this low, then we will be looking to buy. But even if we are buying, we are cognizant that there's a possibility that we are having our last push just to hit 25.75 for the day or for the week, and then we drop all the way down to around 25.32, or to around 25.32 level. And 25.32, you remember what 25.32 is? 25.32 is the previous all-time high. So we might go back there to retest it before we push up again all the way to 2600. So I'm calling 2600 as an objective for now. I'm calling 2600 as an objective for now, but this move might be happening next week unless we have a very quick moves today. But this is likely to be happening next week. Maybe this will even give us the high of the week, and maybe even the high of the month and the new all-time high, and then we will drop all the way to 2200. So I've done my analysis in terms of just by applying the different concepts that I trade: quarters theory, ICT, and Elliott wave. Of course, with ICT being my main. Now I have seen that there's a possibility of us coming all the way down to 2200. I will share the analysis, the big picture analysis, possibly over the weekend. But for now, let us just focus on what we are looking at today. It's very important that we look at the market and what it is doing at the moment. So you can clearly see the reason why we are favoring a move maybe to come and take out these lows is because we already have a divergence that is forming here. There's this divergence that is forming around this area, but don't be deceived. Don't rush and sell it. Don't rush and sell it as yet. Let us first of all wait. I would prefer to see price take out this high first in any circumstance, and I will prefer to see price reach here. If we are looking to sell, we sell from this area and then drop with the price all the way back to 25.32. And again, the drop to 25.32 might take a three-wave formation. So we will also be looking to see if this is what the market wants to do. Alternatively, yes, so this is alternative number one. Then alternative number two is that we first of all drop, and then by 11:30 we take out the low below Asia, and then from Asia we can buy this move, and maybe around New York we might actually get this high. Once we get this high taken, then we can drop with it again all the way to 25.32, and then from 25.32 we start looking for possible buys to 2600. So 2600 is still an objective, and maybe Another thing that we can also do is once we've taken out this low, we'll be careful to see if we get a buy during London, we'll be careful to see what the market will be doing, by the time it approaches this area. If it breaks it aggressively, retests it, then there's a possibility it might not be coming down. Rather, we might just continue up all the way to 2600. So, something that I've always said, what you see us do in the charts before taking trades, this is just analysis. This is what we think. But we don't trade what we think, we trade what we see. So we will. It's always good to have a plan. It's always good to analyze the market and place yourself in that frame where you are telling yourself, I'm looking for this to happen. If this happens, then I'll take this action. That's how I trade. If this happens, then I'll take this action. For instance, if we don't take out this low by 11:30, then I will not buy during London. If we don't take this low by 11:30, I will not buy. I will not engage myself in buying, because buying from this area is very risky, and it also does not offer proper it's not a good risk to reward kind of trade. So I'd like it first of all to at least take out this low for me to buy, or if it goes directly, let's say it just turns from here and hits this level by 11:30, then I'll be looking to short it. I'll be looking to short this market and now go with this move. So whatever happens in the market, just be ready and react accordingly. But as usual, as I always say, respect risk. Risk management is very, very important. All the best today in the market. Let's end the week well. Thank you.